Companies like Aduro Clean Technologies are key examples of the efficient market hypothesis failing in real time. The stock market is grossly inefficient, especially in less liquid environments like we see with most microcap stocks. Aduro has a market cap of approximately 50 million, and even just comparing them to similar companies by that metric alone speaks to just how underestimated this company is right now, although a lack of marketing until recently has certainly played a role in that. Aduro is currently testing their new recycling process called chemolysis in collaboration with Shell, and the market barely reacted when that partnership with Shell was announced, by the way. So Aduro has functioning pilot plants to test things out, but it likely won't be until 2025 or 2026 until we actually see them develop commercial scale recycling plants through licensing out their technology. So let's see how other public comparable companies stack up to that. We have Agilix, and Agilix is another company developing a plastic recycling technology, but they essentially just have a slightly upgraded version of pyrolysis, which is one of the common types of recycling, using significant levels of heat to break down plastics, which is not very profitable in most cases, and they seem to be focused on recycling the type of plastic known as polystyrene. Now compare that to Aduro, who can recycle most types of plastic, and they need to use significantly less energy, so there's large cost savings there, among other benefits to Aduro's technology. But with no commercial plant up and running, Agilix has 4 times the market cap of Aduro, sitting at 200 million currently. Another one's Gevo. Gevo is a competitor in the renewable fuels sector, which is another area that Aduro's technology can cater to later on, although it's not a focus right now. Gevo is yet to even build a commercial facility, and they won't even have theirs done until 2026, which is when Aduro will probably already have some commercial-sized plants up themselves. And Gevo is currently sitting at a 300 million market cap right now. Lastly, PureCycle is another comparable in plastic recycling, and their process relies on dissolution, also known as solvation, which is the separation of plastic waste to recycle polypropylene in this case, which is another type of plastic. Like Agilix, PureCycle is focused on only one type, as for Aduro, they can recycle multiple types. And the kicker is that PureCycle doesn't even own their technology, Procter & Gamble does. Meanwhile, Aduro owns and patents their own process. But since PureCycle's been further along in their development and has recently begun recycling at a commercial plant, they have a market cap of over $1 billion. So in summary, these companies offer minor improvements to existing processes that in many cases are not profitable without subsidies or other assistance. And some of them aren't even all that close to reaching commercial scale, yet they're all trading at far larger market caps. It's not to say that these companies are bad or should be shorted or anything like that. Yet the TAM in these recycling markets is so large, there will be room for all these companies to expand. There's just a massive discrepancy going on in valuation right now. The fact of the matter is, the market's not paying attention, and or does not understand what's going on with Aduro right now. For starters, when the partnership with Shell through their Game Changer program was announced, the stock only moved up around 10 to 15%, even though having Shell work with Aduro to advance and commercialize their technology is a massive de-risking event. Nobody really noticed. Aduro also just recently came out with an announcement about progress on that partnership, where they confirmed they've reached the halfway point in a 6-stage program to test the technology. So far, results have been satisfactory, and Aduro is targeting the completion of the program by the end of the year. And the market still doesn't care. Even though, as management has confirmed, the significant test to watch with the company was the completion of the R2 pilot units for bitumen and plastic, which recycle a few kilograms of waste per hour. Both of these units seem to be functioning properly, and as Mina Bechet, the CFO of Aduro, has stated in previous interviews, at this point, they don't actually view scaling up the technology as one of their primary risks. So why is that? There are 2 primary reasons. One, because the technology has now been proven in a continuous flow of recycling at a smaller scale, management has stressed that the hardware for their recycling process is not the revolutionary part. What differentiates Aduro from their competition is the chemistry. So the risk they're not able to have their hydrochemolytic technology scale to a larger size is pretty low. Because the technology has already been used in other reactors, the engineering firms Aduro is working with have already built recycling projects like Aduro's before. The chemistry is the difference here. The second reason why scaling up the technology has been de-risked substantially is because as the technology scales, the severity is apparently lowered. So the temperature the recycling reactor operates at is lower, so that's even less stress on the process. So combining management's comments about scaling technology, already having R2 pilot plants for both bitumen and plastic, as well as secondhand validation by Shell, I think the company's been de-risked as much as it can, quite frankly, until they actually reach a commercial stage. With that said, there were two more recent news items that are worth mentioning, especially a new hire to the executive team on September 12th. But first, let's talk about this insider buying. So Mina Bechet, the CFO, decided to exercise some of his warrants last month. The notable thing here, the stock was trading at 90 cents Canadian when he exercised at $1. So he decided to buy into the company at a higher price than the stock was trading at and provided some additional funds to the company in the process. And it's certainly a vote of confidence for the company that the market totally ignored. The stock price has really been lethargic since the company listed, to be honest. But speaking of votes of confidence, this news was not on the level of Shell Game Changer probably, but the announcement of a new Chief Revenue Officer was very telling of this company's future. Aduro brought in Eric Appelman as the CRO. His background is a 35-year-long career in the chemicals industry at Unilever, Perstorp, and most recently as the Chief Technology Officer of Brightlands Camelot. If you don't know about Brightlands, this is one of the premier technological research institutes in the Netherlands, if not the world. They have a keen focus on technologies for the circular economy, meaning reusable materials like recyclable plastics. And the team there has thoroughly researched Aduro's technology and has allowed them to set up a demonstration unit on the campus for prospective industry partners. So Eric already thoroughly understands the potential of Aduro's recycling process, and out of hundreds of different technologies and companies that he's seen at Brightlands, he chose to join Aduro and help them with commercial engagement as the CRO. His understanding and connections within the European market will help Aduro as well, as they've been looking to expand abroad. So he wouldn't make a move like this unless he was confident that Aduro was going to succeed. Eric could have chosen to go anywhere, and he chose this startup. It's a big deal. And just today we had Arrowhead release a report on Aduro, giving the company a price target range of $3.6 to $5 Canadian. We're currently trading around $1, which are not crazy price targets at all, given the valuation of competitors in similar situations, like we outlined earlier in the video, especially when you consider that their technology is inferior to Aduro's. So, I only care about the opinions of analysts that agree with me, so... Anyway, I'll link to Arrowhead's website where you can download the 47-page report in the description below if you're interested in reading that. So ultimately, what's going to wake the markets up? It tends to be what we least expect. If it takes Aduro proving out their R3 recycling plant, which is going to recycle multiple tons per day, or if we even have to wait until we start to see significant revenues in 2025 or 2026, either way, I'm going to be a buyer. Aduro's already around 30% of my portfolio, and it's getting increasingly difficult here for me not to go crazy on the buying. But we know larger institutions are interested, given their partnership with Shell and an agreement with an unnamed large oil producer in Canada, and secondhand stories from some of the YouTubers that associate with Aduro that they have interest from various bankers. So getting smart money involved is not going to be a problem, but the market cap is just too low right now at 50 million. We need to see a pretty good run before the stock is more accessible to more institutions and potentially uplisting as well. And that's likely the main disconnect here. As you know, over the long term, if a business is growing rapidly, its stock price will tend to follow suit. So it's only a matter of time if things play out like we think they will. But if you're unfamiliar with Aduro, then I'll link my full video playlist about the company in the description below. And thanks for watching.